Welcome back to another episode of Market Brief After Hours. It has been a truly wild week on Wall Street, but we are ending on a note that history books are going to remember. We've seen volatility, we've seen tech sell-offs, but today we saw a milestone that seemed almost impossible just a few days ago.
It really was a decisive reversal. If you looked at the screens earlier in the week, it was a sea of red. But Friday was all about the comeback. The headline number, without a doubt, is the Dow Jones Industrial Average. We didn't just nudge past a barrier, we smashed through a historic ceiling.
Let's get right into those numbers, because historic is a word that gets thrown around a lot, but in this case, it fits.
It absolutely does. The Dow Jones Industrial Average surged over 1,200 points today. To be precise, it climbed 1,207 points, or 2.47%. That pushed the index to close at 50,116. That is the first time we have ever seen a close above the 50,000 level.
50,000. That is a massive psychological barrier. What exactly fueled a move that big in a single session?
It was a classic rotation, but with a twist. We saw investors piling back into what we call risk assets. But there was also a huge appetite for the cyclical names, the companies tied to the actual economy. You had heavy hitters like Caterpillar climbing nearly 7% and Goldman Sachs up about 4%. Those industrial and financial stocks really did the heavy lifting to get the Dow over that 50,000 line. It signals renewed confidence in the broader economy, not just the high-growth tech sector.
But the tech sector didn't sit this one out, did it? We saw the Nasdaq taking a beating earlier in the week, but Friday looked different.
Very different. The Nasdaq Composite snapped that multi-day slide, advancing 2.18% to close at 23,031. It was led by a resurgence in the semiconductor space. NVIDIA, which has been under the microscope lately, surged nearly 8%. Broadcom was up around 7%. Even Oracle and Palantir tacked on about 4% each. Investors basically looked at the recent sell-off, reassessed the valuations, and decided it was time to buy the dip.
And looking at the broader picture, how did the S&P 500 fare?
The S&P 500 actually managed to reclaim positive ground for the year 2026. It jumped 1.97% to finish at 6,932. It's interesting, though. Despite that massive rally on Friday, the index still posted a tiny decline of 0.1% for the week. It just goes to show how deep the hole was that we were digging ourselves out of earlier in the week.
So we have the Dow at 51,116, the Nasdaq at 23,031, and the S&P at 6,932. A sea of green across the U.S. majors. But before we move on to the global picture, we have to touch on sentiment. There was some data out from the University of Michigan, right?
That's right. Consumer sentiment is improving, which is great fuel for a rally. The index rose to 57.3 in February, beating expectations. But the really key data point there was inflation expectations. One-year inflation expectations dropped to 3.5%, which is the lowest we've seen since January 2025. When people are less worried about inflation, they feel better about their equity exposure, and that sentiment feeds right back into the market.
Now, speaking of volatility, we can't ignore the crypto market. It felt like the floor was falling out from under Bitcoin earlier, but that turned around sharply too.
Sharply is an understatement. Bitcoin rebounded over 10% on Friday, closing at $70,008. It had briefly dipped below $61,000, so that's a massive intraday swing. It was the largest daily percentage gain since March 2025. However, context is key here. Even with that jump, Bitcoin was still down 16% for the week and is sitting more than 50% below its peak from late 2025. So it stabilized risk sentiment, but the crypto winter isn't exactly over.
Let's hop across the Atlantic. It sounds like the optimism wasn't contained to New York. How did the European markets wrap up their week?
Europe ended on a much firmer footing, largely thanks to a bumper earnings week. The Pan-European Stock 600 rose 0.9%. If we look at the major national indices, the FTSE 100 in the UK had a great week, ending 1.43% higher. On Friday specifically, Germany's DAX advanced about 0.9%, snapping a three-day losing streak, and France's CAC 40 added 0.52%.
Was it green across the board in Europe, or were there some laggards?
The auto sector was a major drag. Stellantis shares absolutely slumped, down 24% after they announced a $26 billion business reset. That pulled down other French auto stocks like Renault, which slid 3%. But macro data helped balance that out. German exports were up 4% month over month, and UK house prices rose 0.7% in January. So the economic backdrop in Europe is looking a bit more resilient.
And quickly, before we take a break, what was the story in Asia?
Asia was a mixed bag because they were reacting to Wall Street's earlier losses before the Friday rebound kicked in. South Korea's Kospi fell 1.44%, and Australia's ASX 200 dropped roughly 2%, hitting its lowest level in a month. However, Japan bucked the trend. The Nikkei rose 0.81% to 54,254, and the Topix actually hit a record high, supported by their automotive shares. Quite the contrast to Europe.
It's fascinating to see that disconnect due to the time zones. We are going to take a very short break, but when we come back, we are going to dive deep into the Forex markets, specifically looking at those technical moving averages, and we'll break down the biggest individual winners and losers of the day. Stay with us. Welcome back to Market Brief After Hours. We've covered the headline indices, but for our listeners who track the currency markets, Friday provided some very interesting technical setups.
It certainly did. The technicals are painting a pretty clear picture of trend strength right now. Let's start with the euro against the dollar. Euro USD closed up 0.38% at 1.1822.
And looking at the moving averages, is the uptrend still intact?
Very much so. The pair is trading comfortably above all its key simple moving averages, or SMAs. You have the 50-day SMA at 1.1730, the 100-day at 1.1679, and the 200-day at 1.1618. When prices stacked above those averages like that, it underlines a strong medium-term uptrend. We are seeing a sequence of higher highs and higher lows. The immediate resistance is right there at 1.1826. If it clears that, we could be looking at 1.1900.
What about the British pound? It feels like sterling has been fighting to get back on track.
It has, and Friday was a big step forward. GBP USD rose 0.64% to settle at 1.3618. Crucially, it has decisively regained its moving averages. It's back above the 50-day SMA at 1.3468 and the 200-day at 1.3428. Reclaiming those levels restores technical support beneath the price. The momentum indicators are turning favorable again. The next target for the bulls is that 1.3800 to 1.3850 zone, provided they can sustain trade above 1.3600.
And the Aussie dollar, that usually acts as a proxy for risk appetite.
Exactly, and it performed very well, which aligns with the stock market rally. AUD USD finished up 1.36% at 0.7020. That is one of its strongest daily performances this quarter. It is firmly positioned above its 50-day SMA at 0.6735 and the 200-day at 0.6569. Closing near the session high of 0.7025 suggests strong demand heading into the weekend. If it breaks 0.7025, the next focus is 0.7100.
Now, not everything was moving against the greenback, but the Canadian dollar seems to be struggling.
Yes, USD CAD is the outlier here. It ended at 1.3655, down slightly by 0.40%. Even though the US dollar weakened a bit, the technical bias for this pair remains tilted lower. It is trading below its 50-day SMA at 1.3782 and the 200-day at 1.3824. The sequence of lower highs since December is still intact. Unless it can break back above that 1.3725 resistance, the risks are still to the downside, potentially targeting 1.3500.
Let's pivot to commodities. With the dollar moving and risk appetite returning, what happened with the precious metals?
Gold is on a tear. It resumed its uptrend with serious momentum, closing up 3.65% at $4,951. It's trading well above its 50-day SMA of $4,535. The price action shows strong institutional demand. We are knocking on the door of $5,000. Immediate resistance is at $4,971, and a break there brings the big 5000 into focus.
And silver?
Silver was exceptionally volatile. It surged 9.21% to close at $77.47. The range was wild, swinging between roughly $64 and $78, but it finished near the top, which shows aggressive dip buying. Like gold, it's well above its moving averages, with the 50-day at $76.61 providing immediate support.
Okay, let's wrap this up with the market movers. We mentioned the indices, but which specific companies were making the biggest waves?
We have to talk about the chip makers again. Aside from NVIDIA, we saw ARM Holdings and Supermicro Computers surge over 11%. AMD, KLA, and Marvell Technology all gained over 8%. It was a wholesale rotation back into semiconductors.
And outside of chips?
Bill Holdings was a standout. The stock jumped more than 36% after they beat earnings expectations and raised their full-year guidance. That is a massive move.
But it wasn't a party for everyone. Who got left behind?
Molina Healthcare had a rough day. They slumped over 25% after reporting an unexpected quarterly loss. And we have to mention Amazon. Despite the tech rally, Amazon sank over 5%. Investors are worried about their capital spending. They warned of $200 billion in capex, which raised some eyebrows regarding returns on AI investment.
$200 billion is a number that is hard to even wrap your head around. It really highlights the stakes in this AI race.
It does, and that's really the story of the week. We have high stakes, high volatility, but ultimately a market that is finding its footing. We have the Dow above 50,000, inflation expectations dropping, and a tech sector that refuses to stay down.
It sets us up for a fascinating week ahead as we wait for more inflation data and central bank signals. That is all we have time for today. If you find this useful, please follow Market Brief After Hours on your favorite podcast platform so you never miss an update. Thanks for listening.